and there's a lot of chaos. I think there's a lot of big moves happening just around the corner, but it could go either way, and that's what we're focusing on right now, is protecting capital. When there's a clean direction, a new trade, we'll get in and take action.
Here at Liberty in Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Hey, thanks for having me, Elijah.
It's great to talk to you. And what I wanted to discuss first off is the precious metals. Now, we have seen, good strength in the metals. We haven't really seen a big downturn since the last time we've talked. Your perspective where we are right now. Sure.
Well, I'll pull up the charts. I'll give you a visual of what I'm seeing for gold and silver, and both of them are pretty much the same. Even across the board, if you're into mining stocks, they all have pretty much the same type of scenario. So this is the daily chart of gold futures, and we've seen it have a recent rally. It's kind of worked itself higher and sideways over the past few weeks here. Last week, it hit its head on this blue line, which is the 50-day moving average. And I find that to be a pretty critical level. It's naturally going to act as a resistance area when you're below it. And once you're above it, it should act somewhat as a support zone. So we have seen gold struggle at that level. Also at that level is where we had a consolidation about a month and a half ago, where there's a lot of volume. So naturally, when price sells off, people get nervous who are holding gold. When it gets back up to the level they had purchased it, it's kind of like, get me out. I want to exit the position. I'm done with that roller coaster ride. So when you come back up to a previous level where there's a lot of volume, there's always going to be some overhead resistance of people saying, okay, get me out and move forward. And that's where we are with gold. It's having a little pullback, but in the grand scheme of things, gold, silver, and miners are trading sideways in a very strong pattern here. I think it's very close to wanting to start another rally that could last potentially a month or two. But I don't think it's here just yet. I think what may be happening in the stock market might put a little pressure on metals as they trade sideways or a little bit lower for a few weeks before they go higher. And, if you look at gold from the big picture, we just go to the quarterly chart. This is kind of, really looking out at the long-term picture. Gold has put in this multi-year kind of consolidation, the basing formation, and now it's formed this kind of cup and handle pattern or this bull flag pattern. And you can see in this last quarter bar, we've just pulled down to the mid-range of this pattern. This is this is a bullish price pullback. There's nothing bearish about it. This is just a consolidation. It could take a couple more bars here, which every bar is 3 months. So it could still take a while for gold to work itself through this pattern. But the next upside move, when it does get traction, is going to bring us to probably 2,700. So I know a lot of people are nervous with the recent pullback in metals. But when you look at it from the quarterly standpoint, same with silver, it's a very strong support level. The pattern is very strong and pointing to much higher prices. It's just these are multi-year patterns, and they don't happen overnight. They take a lot longer than most people want to wait, but there's nothing we can do but wait and ride it out. And it is in a bull market phase, and I think it could continue to go a lot higher in due time.
I think it's interesting to see that quarterly chart because it really gives a perspective on how minor this pullback really is in the grand scheme of things.
Yeah, for sure. Yeah, it really sets the tone of expectations. Like if you think, we have a flag sideways here for a few more bars, that's another, 6, 9, 12 months. So it gives you a perspective of this is a big pattern, and it could take, we've got gold on a super cycle to the upside. It could take rally for another 3 to 5 years. Doesn't mean it's going to rally for 3 or 5 years straight. It means it's going to continue to work itself higher and sideways for potentially 3 to 5 years. So this is a big pattern. It'll take some time to mature.
In silver, what are you seeing right now?
Silver's got somewhat of a similar chart. If we just kind of zoom in on this more recent price action, it's had a very strong run. It's flagging sideways in a bull flag pattern, very strong looking pattern. And, the next level to the upside is going to be somewhere $36, $40 an ounce for silver. And as you can see, it's flagged sideways for several quarters. and it might still do that. I think we'll see them both move roughly at the same time. So when one of these breaks out, the other one will most likely break out as well. But overall, the pattern is extremely strong. A nice strong rally on big volume. It's flagging sideways and down, which is what you want. And volume is slowly tapering lower and lower, and that's a bullish pattern as well. So all these things are pointing to higher prices on the chart. And we just have to, I think, let the market do its thing, unfold. And I think there'll be some pretty exciting times ahead when the perfect scenario unfolds and we see this rocket higher.
Now, you mentioned how the stock market may put pressure on precious metals. What do you see going forward for the stock market?
Sure. So we're really close. We're potentially, this week we could have a new buy signal in the stock market. And the big question is it going to be a small rally, or is it going to have some legs behind it? The last time we got in, we played a move up and we got out very quickly, made some money on this last breakout because there wasn't any real momentum behind it. It gave a nice signal, fizzled out very quickly. We have a very similar type of setup unfolding right now. And the big question here is, if the stock market, breaks here and starts to rally, and if it gets some really big legs and say we come back up to this previous high, which is possible, we're going to see money naturally want to flow back into the growth stocks. Growth stocks are just starting to come back to life. Lots of stocks are building a basing, a bottoming formation, and they're all ready to kind of pop and rally, and now that'll kind of send the stock market higher. And if money starts to flow back into the stock market, into growth stocks, they naturally want to move out of the more kind of boring, defensive, conservative assets, which would be like bonds, precious metals. And so if the stock market rallies, money's naturally going to want to flow out of gold and bonds, and we'll see those trade sideways or consolidate for another potential couple of weeks as the stock market rallies. But eventually when the stock market rolls over and starts to sell off and fear creeps in, bonds will come back to life. We're going to see gold, silver, and miners come back to life. And I think there's really good potential for the mining sector and precious metals to spark a fairly decent rally at that point. I think there's still several more months worth of work before the precious metals market really breaks out to this new bull leg, like on the quarterly chart. But it can still have some significant rallies, the precious metals market, just to get up to those upper levels before it breaks out. So there's still quite a bit of upside alone before we break out into a new bull leg on precious metals.
Now, what do you think will drive this rally in the stock market? Because it seems like fundamentally we've just been hearing a lot of bad news about the economy. Yeah,
we got out of the market as an investor back in March, early March, and we've just been kind of sidestepping most of this pattern. And, there's layoffs coming. Everyone seems to be trimming and tightening up on their spending. To me, it feels like a recession's already, started. Where we're at right now is just the stock market seems to be so oversold that it actually is just having, you could call it a dead cat bounce. I think we are very close to starting a full-fledged bear market in equities. The NASDAQ is more or less already in a bear market. I mean, it's already collapsed, 25, 26% this year. The SP 500, not so much. I think this rally is just going to be a relief rally. A lot of people bottom picking. We're going to see the market kind of rally up a little bit, but it will fizzle out. I think we're just seeing the majority of stocks are just oversold. A lot of growth stocks are down like 50, 80%, which is huge. And they're due for a bounce and a short covering bounce. Over the last week or so, we've seen all the biggest gainers have been the most shorted stocks. So investors or short-term traders are buying back their shorts, locking in their profits as they profit from falling stock prices. And that's not what puts a bottom in the stock market. It's not when the growth stocks, just have some short covering. I think there's a lot more work to be done. So I think this is just going to be a bounce, and then the market is going to roll back over, and we could go a lot lower from where we are in terms of equity prices.
Do you have an expectation of how low we could go?
It's tough to say. I mean, I think we could come all the way back. If we zoom back on this chart, I think there's potential we come all the way back down to 32, 3,400, which is quite a haircut from where we are right now. If we look at that, we're looking at, we'll just go right in the middle of that level here. It's another 20% down from where we are. And that would definitely reset the market. It would bring us right back down into this consolidation. If I just grab a pencil here, we had the COVID crash crash, we had the rally up, and then we had this consolidation, like a bull flag pattern or a cup and handle pattern. This is a pretty major level across the chart where we saw more or less an event happen, and then everybody piled in. And usually the market, when something happens based on news, some type of event, you can have huge price moves, but usually the move is negated once that momentum runs out of speed. So price would come all the way back down, wipe out all of these gains that investors had, and kind of reset things. And then at that point, we'd be looking at, where are we at now for the next bull market, what sectors to go into. We'll just have to see how things unfold. I think the economy is going into more of a recession that isn't just going to be a quick sell-off. It could be something much longer where it lasts several years. Stock market doesn't just rebound and recover very quickly. It could be a relatively painful process. And during that long, painful process of stocks not really getting traction or moving higher, I think that's where other assets like commodities and precious metals are actually going to shine and potentially do extremely well for 2, 3, 4, 5 years. So we're still in the infancy stage, I think, of the precious metals market getting a real good foothold. But it feels like it's just around the corner, and it's going to be a pretty exciting ride when they do get traction and that next rally in precious metals starts.
And your perspective on the increase in yields that has been quite dramatic, it seems like, over the last few months. I mean, we're above 3% on the 10-year Treasury yield. How has that been impacting the markets?
Yeah, so I like to look at the long-term bonds. So if I was to go to the bond chart here, which is pretty much the inverse chart of the yields, we are starting to see what I think we're starting to get into a bottoming phase here in the bond market, which means a topping phase in the yields. We could potentially see yield or bonds fall even a little bit further, and we could see yields continue to rally a bit more. And there's this pattern, which I call kind of 3 surges to a high. I'll just flip back to the yields because that's what you're talking about here. But we could start to see, we've had a rally up, we've had a sharp pullback, another rally, a sharp pullback, and we're kind of coming up here to a level where we might pierce to some new highs. But you could argue there's a few different patterns at play here. There might be a bit of a head and shoulders pattern, and we've got this neckline right across here, that if price comes down and breaks this neckline, it can really collapse and sell off in a big way. And of course, if the yields do start to break, put in this topping phase and break down, bonds are going to start to rally. So I think that is a scenario that could happen. If the stock market, things get very ugly, for all we know, we could see money pile back into bonds. We could actually see the yields start to come back down and break down, and money will flow out of stocks, and it could go back into the bond market going forward. So yields are looking toppy, but they haven't reversed their trend yet. When you look at the price of the 10-year, it's come down to this blue line, which is the 50-day moving average. It typically acts as a pretty critical launch pad for the price to kind of reset and then launch. So we need to see where this goes, because there is potential yields continue to skyrocket. And if we were to just kind of look at this pattern and use based on technical analysis, we can take Fibonacci extension and give an upside target of where yields could go. Now, this is a huge rally in yields. We could see obviously a 38% rally. It would be 4.2% on the yields based on this rally and this pullback. This is a bull flag pattern, very similar to what silver's doing, similar to what gold is doing. It's just on the daily chart. So there's potential for yields to continue to take off if the Fed wants to, fight inflation and things like that. So it'll be very interesting how things unfold going forward. I think if yields keep going up, I think it's going to put pressure on the stock market. Obviously, lending, mortgage rates, all these things become more expensive. Profits get eaten away with higher yields. I think, the stock market, if yields keep going up, I think it's going to be very painful on the stock market going forward. And the Fed's trying to slow things down. That's what they're doing right now.
There's an expectation of at least 2 more, possibly more than that, rate hikes this year of 50 basis points. Do you think that's going to happen, and how is that going to impact the markets?
Yeah, I'm not sure if it's going to happen. I mean, they're on a roll right now. They really want to keep jacking up the rates, but whenever things get a little scary, they always kind of bail out and give up and go back to some type of easing program. I think this time they actually got a foothold in. I think they're really digging in. They want to just raise rates. So I think one may happen, maybe both of them will happen. It really depends what the stock market is doing at the time when they go to raise them. I think they could chicken out at the last minute. If the stock market is back into free fall mode, hitting new multi-month lows, maybe even a multi-year low here in terms of the stock market, if it breaks the lows we saw already, they might chicken out and they might not raise rates. So it's going to be interesting. They really, I don't think, know until the last few days, and depending what the stock market is doing. So
when it comes to cryptocurrencies, your perspective on where we are right now, because over the last year or so, we have seen quite a bear market in Bitcoin.
Yeah, when I look at Bitcoin, I mean, we're back down at the lows that we saw way back in 2021. We're testing those areas. The market's just trying to get some traction right now. We're having a nice pop as you and I are speaking. The grand scheme of things, though, is Bitcoin is still technically in a downtrend. We've had a sell-off. We've had a bear flag. We've had a sell-off. We're still in a bear flag. And it's kind of testing a resistance area, the 20-day moving average, which is this pink line. And so we'll see. We'll see if it can break and pop and start to extend higher, or if it's going to reverse and sell off and move down. At this point, if Bitcoin was to start to break down here, I mean, I've got a pretty strong downside target around 21,000, and then goes all the way down to about 16,000. And we have to just, if this level is broken, this bear flag, if it starts to break these lows of these open and closed prices here, it's going to be lights out, and it's going to unwind and unleash the fury for the crypto space. Unfortunately, it's going to do a lot of damage. We need to see which way it's going to break. At this point, it's a bearish sign. It is at long-term support, but it is in a downtrend, and you really should be almost just kind of waiting on the sidelines at this point, because whichever way it breaks, it's probably going to have a significant rally. If it does rally, it's going to go to 35,000 very quickly, and then the next real struggle level is going to be about that 40,000 mark. So those are the two thresholds where there's going to be clear overhead resistance. The downside, you're looking at probably like 21 and then 16. So those are kind of the four levels to watch for going forward at this point.
Definitely. Well, before I let you go, Chris, did you want to share with the viewers where they can find you and any last thoughts you had?
Sure. They can find me at thetechnicaltraders.com. And there I share kind of a video analysis, kind of like what you and I just did. I go through the markets every morning before the opening bell, recap what's going on all different sectors and asset classes. And we look for short-term plays and swing trade plays, and also what to do with our long-term capital, especially in a unique time like this. There aren't many safe haven plays right now. It's either like cash or commodity type of play. And it's important to know where to put your money, because this is a super volatile time, and it is a reason to protect your capital. It's better to miss out on some gains, I think, right now than it is to try to be aggressive and lose a bunch of money. You can always get back into this market, and there's a lot of chaos. I think there's a lot of big moves happening just around the corner, but it could go either way, and that's what we're focusing on right now, is protecting capital. When there's a clean direction, a new trade, we'll get in and take action. And I share every trade that I do with subscribers each day.
And what are some of the signs that you're looking for that would confirm that we're kind of out of the woods? Because as you mentioned, we've seen a lot of chaos in the markets recently.
Yeah, there's a lot of work to be done. I think we need to see the stock market go up and break the highs from several months ago. Not all-time highs, but just the recent rally that we saw back April timeframe. Once it breaks those highs, we really need to kind of analyze and see what's going on. Is the stock market outperforming all of the other defensive plays? Is it outperforming dividends, utilities, precious metals? What are commodities doing? Where's money flowing? Which way is the dollar moving? The dollar is a good way to get an idea of what kind of global fear there is. See what the VIX is doing, if it's still holding up or if it's actually, fading down dramatically and back down near the lows. So really, we need a significant rally of that 5-8% or so from here. And then we need to see what the whole market is doing as a whole, how much money is flowing and where. And that'll give us a gauge as to if there's commitment behind this rally or not. And then from there, we can figure out if we want to be long, stay defensive, or take advantage of potentially falling prices if it does stall and roll over and head lower.
All right. Well, Chris, thank you so much for joining us today. And thank you so much, and God bless.
Always a pleasure. Take care, Elijah.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty in Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.